I
Good
know we're
morning.
not quite done with the Fed yet, but the bond market seems to be saying we're probably done. Maybe, I don't mean not another rate hike, but just markets really now aren't moving on Fed speech like they used to. What are you most focused on now going forward?
Good morning, Brian. Yeah, I think that's right. And I think obviously the last few years beyond the pandemic has been talking about the Fed. And it's certainly interesting. I think the next 2 years is more about earnings. And that's something that would be in stark contrast to focusing on, are we going to do 75 basis points or 50 or 25? I think, yesterday, I think more confirmation that we're almost out of this dark tunnel of rate hikes, maybe two more hikes, and we can kind of focus on earnings. And I think what's most interesting now is this new kind of competition for capital, a 2 year above four, and companies are scrambling to put their houses in order and, think about earnings more than hype.
Have you been happy with the earnings and the guidance that you have seen overall?
Well, it's not about being happy or not. I think it's expected. We're seeing margin compression. We're seeing earnings declines, kind of not across the board, but, in the aggregate, we're going to see earnings declines with some revenue growth. But I think what's interesting is we're seeing, we saw it this morning with eBay and recently with Dell, is companies are cutting jobs. I think there's this acknowledgement that when rates were below 1%, you could kind of do whatever you wanted, and as long as you were optimistic enough, people were gonna bid it higher. Now you actually have to do the work. You have to deliver earnings. You have to be, in the words of Facebook, efficiency is going to be the theme, and it should always be the theme. But I think when rates are creeping higher and people are starting to look at a 60-40 portfolio, and that 40 all of a sudden is a little more interesting, with a 2 year and a 10 year kind of, in the four range, I think we're going to see the results of that. So, I think it's all very interesting and leads us to a better place ultimately.
And you look for companies, you screen companies as a fund manager, you look for forward earnings that may be undervaluing specific companies. You found two, you brought two names for us. Both are interesting. They're not ones we talk about very much on CNBC. Commercial Metals and Sunoco Products. Sunoco, the name we know, but this is a bit of a different type of story. What about each one of these companies, Josh, do you like?
Sure. Yeah. So these are names in our Hennessy Cornerstone Midcap 30 fund. And we're looking at earnings growth, valuation, and stock price momentum. Commercial Metals, a provider of rebar. So something very kind of, foundational, no pun intended, to the economy. Recycle scrap metal, trades at about 8 times forward earnings. And it's a name that, as you mentioned, no one talks about. It's admittedly, pretty boring, but, this boring company is hitting all-time highs, pretty much as we speak. So it's interesting. I always say, investing doesn't have to be exciting. And so this would fall in that camp. A lot of the names that peaked in 2021, the FANG type stocks, they're still well off their highs. And here we are with Commercial Metals, hitting all-time highs. And then Sunoco, another kind of boring type name, but, I'll take boring all day long. They are a manufacturer of commercial or consumer and industrial packaging. 11 times forward earnings, very strong free cash flow generation. I think with both names, you don't have to worry about foundational shifts in, AI or anything that, is become, de rigueur in the last few days. There's no chat GPT displacement or conversation around names like this.